Hi, my name is Michelle Holmes, and welcome to another edition of CMS Forex News. Today is Thursday, May 22nd, 2008. Spending by businesses in the UK for investment took a pretty steep hit in the first quarter. Compared to the fourth quarter, investment was down 1.4% and the annual pace cooled to 3.7%. Both figures were far below forecasts. Retail sales fell for a second straight month in the UK during April, but the decline was smaller than forecast at 0.2%. In annual terms, sales cooled to a rate of 4.2% from 4.7% in March. The CBI Industrial Trends Orders Index improved to negative 10, meaning 10% more manufacturers said they expect orders to be below normal. Despite the shrinking demand, 36% of the respondents surveyed expect to raise their prices over the next quarter. The pound-dollar pair, after initially falling following the poor investment data, recovered and set a new high near 1.9850. In New York trading, it gave up part of those gains, falling back down to the 1.98 area. Industrial new orders in the Eurozone fell 1% on the month, while the annual rate showed a 2.5% decline. Both figures were below expectations. Orders are being squeezed by a high euro, higher oil prices, and a slowing U.S. economy. Evidence is mounting that second quarter GDP will be quite weaker than the first. The euro-dollar pair was pressured by the news, helping the dollar recover some of its losses from the last two sessions. The pair set a high above 1.58 prior to the European data and fell about 100 pips from there. In the U.S., initial jobless claims declined by 9,000 to 365,000. Continuing claims continued climbing higher, reaching 3.073 million. The data suggests that firms slowed the pace of layoffs, though those that have lost their jobs already are finding it hard to land a new one. The news was dollar positive as it beat forecasts. Also from the U.S., a government house price index showed prices declining 1.7% in the first quarter, the largest quarterly decline since 1991 when the record began. The annual decline of 3.1% is also the largest on record. On the month, the HPI was 0.4% lower. As prices come down, it could lead to a recovery of the housing market as potential home buyers can afford the homes they seek. However, weakening housing prices will continue to weigh on consumer spending as home sellers make less profit from their home sales. With oil prices stalling their rise after 2 days of sharp gains, the U.S. stock market recovered. The Dow Industrial had dipped almost 450 points the last two sessions, and today afforded bargain hunters the chance to prop up stocks. The dollar-yen pair, which had a strong correlation with equity markets, rebounded this session. From its low overnight, it climbed 120 pips, with those gains accelerating in New York trading. In Canada, retail sales in March showed a 0.1% increase compared to February when sales were down 0.8%. The automotive sector led the way with a 0.4% increase. This increase came from a 0.7% rise in sales at gasoline stations, reflecting higher prices at the pump. The U.S. dollar-Canadian dollar pair's downtrend this week was stalled as well, with the greenbacks gaining following the Canadian data. Oil has climbed from $126 a barrel to top off $135 a barrel overnight before returning to the $131 level by 3 p.m. Eastern Time. Tonight, Japan posts meeting minutes. Overnight, Switzerland reveals its trade balance and the UK releases GDP figures. The Eurozone and Germany will post their advanced releases of manufacturing and services PMIs. To finish the week, the U.S. will release data on existing home sales. That wraps it up for the day in Forex News. Join us here again tomorrow at cmsfx.com.